The US just raised tariffs on Chinese goods. Everyone expected retaliation. But instead of targeting tech, manufacturing, or finance, China went straight for American agriculture. Why does that matter? Because agriculture isn't just another industry. It's one of America's biggest economic weapons. The US exports more than $150 billion in agricultural goods every year, and China has been one of its biggest customers. Now, that door is closing fast. This isn't just about money, it's about pressure. China isn't just hitting the US economy, it's hitting the heart of rural America. And why? Because that's where Trump's biggest support base is. If farmers feel the pain, the political pressure shifts. And that's exactly what China wants. The real question, is this just the first move? Or is China setting the stage for a trade war the US can't afford to win? If there's one thing that makes American agriculture powerful, it's exports. And China just put that entire system at risk. Here's why this is a big deal. The US doesn't just feed its own people, it feeds the world. More than 20% of all American-grown crops and meat are sold internationally. And China? It was one of the biggest buyers. Until now. China knows exactly where to hit. Soybeans. The US sends tens of millions of tons to China every year. Corn, beef, pork, all major US exports, now on the chopping block. If those sales disappear, farmers don't just lose profits. They lose their entire market. And here's where it gets worse. Crops can't just sit in storage forever. If China stops buying, supply piles up. Prices crash. Farmers take the hit immediately. China is playing the long game. They're not just cutting US imports. They're making sure America's top trade weapon loses its power. So the real question, does the US have a backup plan? Or did China just expose the biggest weakness in America's economy? If the US thinks China needs its crops, it might be in for a wake-up call. Because China already has backup suppliers, and they're moving fast. Soybeans? Brazil and Argentina are already stepping in. Corn? Russia is boosting exports straight to China. Meat? China has been building up its own pork and beef supply for years. This is not the 2018 trade war. Back then, China still relied heavily on US soybeans and grains. Now, they've spent years securing alternative suppliers. Cutting off US agriculture hurts less than it used to, and that's dangerous for American farmers. And here's the real problem for the US. If China fully transitions to other suppliers, those contracts don't just come back overnight. Brazil, Argentina, and Russia are ready to take that business permanently. Once China stops buying US crops, it could stay that way indefinitely. Losing a tech deal? You pivot. Losing car sales? You offer discounts. But losing agricultural exports? That's a disaster that can't be fixed overnight. Here's why. Tech companies can shift production, diversify markets, and adapt. Automakers can sell at lower margins, redesign models, or find new buyers. But farmers? They can't just pause a harvest. Those crops are already in the ground. If China stops buying, the damage is instant. Farmers still have to sell. And without buyers, prices crash. Supply chains aren't built to shift overnight. Losing a major buyer leaves products sitting with nowhere to go. And the bigger picture? A supply glut hurts all farmers, not just exporters. Commodity prices drop across the board, even for products China wasn't importing. Farms close, jobs disappear. Rural economies feel it first. This is why China's move stings more than any tariff war on tech or manufacturing. It's not just about losing sales. It's about breaking an industry that takes years to rebuild. So, does the US have a way to counter this? Or did China just find the perfect economic pressure point? If China is willing to cut off billions in US agriculture, what else is on the table? Because this may not stop with soybeans and corn. Here's where things could escalate next. Energy exports. China still buys US liquefied natural gas and crude oil. If that gets cut, energy markets take a hit. Aircraft deals. Boeing relies heavily on Chinese buyers. A pullback here? The U.S. aerospace industry suffers. Tech components. China still imports semiconductors and high-end machinery from the U.S. If they start cutting that too, tech companies feel the squeeze. This isn't just about crops anymore. China's strategy is clear. Make the trade war hurt in the places the U.S. can't ignore. If agriculture doesn't force Washington to rethink tariffs, Beijing has more leverage ready to go. The bigger question: how far does China want to push this before it starts feeling the pain too? And that's where this gets risky, on both sides. The U.S. can absorb losses in certain industries, but agriculture and energy? Those are billion-dollar markets. China also depends on key U.S. exports, especially in advanced technology. If this turns into an all-out trade war, it won't just be farmers taking the hit. If China isn't stopping here, what's the next industry on the chopping block? And more importantly, can the U.S. afford to let this escalate further? Escalating a trade war is easy. Winning one? That's a different story. Right now, the U.S. is feeling the impact. But how much more can it take? Where the pressure is building. Farmers are running out of buyers. With China shifting to Brazil and Argentina, U.S. crops are stacking up with no market. Industries connected to agriculture, shipping, storage, processing, are already feeling the slowdown. If Washington doesn't step in, local economies dependent on exports could start to break. The bigger risk? Long-term damage. China isn't just cutting imports temporarily. They're locking in new trade partners. Even if a deal is reached, will those markets come back? Losing China's business for good could reshape U.S. agriculture forever. The political side. Farmers and rural economies helped elect Trump. But if they're the ones paying the price, how does that play out? Will the U.S. double down? Or start looking for a way out before the damage spreads? A trade war only works if you can outlast the other side. So, who's going to blink first? The U.S. or China? China is playing hardball, cutting U.S. agriculture out of its supply chain. But is this strategy as safe as it looks? Here's where China might run into trouble. Food security is still a risk, even with Brazil and Argentina stepping in. Bad harvests or supply chain disruptions could leave China exposed. Import dependence hasn't disappeared. China still imports massive amounts of soybeans, corn, and meat. If global markets tighten, prices could spike on their end. Relying on new trade partners isn't always stable. Brazil and Argentina are expanding exports, but can they deliver every year? China is betting big on cutting out the U.S., but there's a risk. If global food markets shift or a supply crisis hits, China might not have a fallback option. And there's another factor: global trade dynamics. If China keeps escalating, other major economies could start siding with the U.S. Would Beijing risk turning a trade dispute into a broader economic fight? This move puts pressure on the U.S. But is China also walking a fine line? If this backfires, does China have a backup plan? Or is this a risk they can't afford? With that said, thanks for watching, and until next time.